Hey there, are you curious about what the projections are in relation to the housing market for the rest of the year? If so, then you're in luck because I've got your mid-year market update. Hi, I'm Caitlin Davis with Wicked Realtors, the Andrews Group. Here are some things to consider heading into the coming months. First of all, home prices are appreciating at normal rates. Over the past 10 years, we've seen home prices appreciating significantly from one year to the next. We just keep going up and up. Well, according to the experts at the Home Price Expectation Survey, Fannie Mae, Freddie Mac, and the Mortgage Bankers Association, they are all anticipating appreciation to continue to go up as we move into 2020, but it's going to be at more normal levels, which they're anticipating are going to be around 3.6%. Secondly, interest rates are still very low. In the 1980s, interest rates were as high as 18%. The average interest rate over the last 30 years has been 8.27%. And today they are actually under 4%, which is considerably lower than the average over the past 30 years. Lastly, we need to remember that an impending recession does not mean a housing crisis and crash. I know that people are getting a bit nervous with all the talk of a recession, but according to research from Duke's survey of American CFOs and the National Association of Business Economics, they are anticipating a recession within the next 18 months, but recession does not equal a housing crash like we experienced in 2008. In fact, expert financial analyst Morgan Housel tweeted, "An interesting thing is the widespread assumption that the next recession will be as bad as 2008. Natural to think that way, but statistically highly unlikely. Could be over before you realized it began." Oddly enough, in 3 out of the last 5 recessions in the United States faced from 1980 to 2008, home prices actually went up. And let's note that in 2008, it was the worst in regards to housing prices declining, but we need to remind ourselves why that was happening. Notes are being sold to investors as A paper that were actually D paper, and loans are being approved that had no business being approved. An example of that would be approving people with stated income loans. These things are just not happening anymore, and now in order to get a loan approved, they basically are going to want your firstborn child. So let's recap. The experts are anticipating normal appreciation heading into 2020. Interest rates are low and anticipated to remain low, and if there is a recession, that does not mean a housing crisis, but more likely will mean normal levels of appreciation. So what does that mean for you? It means it's time to get off the fence and to make a move. And don't forget the wonderful advantages you may receive from owning a home and being able to write off the interest. I hope this mid-year market update was helpful, and as always, please feel free to reach out to me for any of your real estate related needs or just to see if there is anything at all that I can do to serve you. I'm Caitlin Davis with Wicked Realtors, the Andrews Group, and remember, there's no place like home.